The 31st of January 2026 is the deadline to file your self-assessment tax return in the UK. This deadline applies to the tax year running from the 6th of April 2024 to the 5th of April 2025. Missing this deadline can mean penalties and interest. Many people in the UK think tax returns are only for the self-employed, but that's not true. You could be fully employed and still required to file one. But here's the problem: millions of people don't realize they must file a tax return, even if they're fully employed and pay tax through PAYE. Today, I'm breaking down every scenario where HMRC requires you to file a tax return, including the tricky ones that catch people out every year. Section 1. The core HMRC rules. HMRC says you must file a tax return if any of the following applied in the tax year. You were self-employed and earned more than £1,000. You were a partner in a business partnership. You had to pay capital gains tax. You had to pay the high-income child benefit charge. You had untaxed income, such as rental income, dividends, foreign income, or commissions. You received savings or dividend income above certain thresholds. You want to claim certain tax reliefs. Section 2. Tricky scenario number 1. Employed people earning £60,000, £80,000 with child benefit. This is one of the biggest traps. If you or your partner received child benefit, and either of you earned over £60,000, you may need to repay some or all of it through the high-income child benefit charge. HMRC requires you to file a tax return if you owe this charge, even if you're fully employed and pay tax through PAYE. So if your salary is between £60,000 and £80,000, and your household receives child benefit, you almost certainly need to file. Section 3. Tricky scenario number 2. Company directors. HMRC expects most company directors to file a tax return, especially if you paid yourself dividends. You received directors' loans. You had benefits in kind. You have multiple income sources. Even if your salary is small, dividends count as untaxed income, which triggers self-assessment. Section 4. Tricky scenario number 3. Rental income, even small amounts. If you rent out a property, residential, commercial, or overseas, and your gross rental income exceeds £1,000, you must file a tax return. This applies even if your expenses wipe out the profit. You're renting to family. You only rented for part of the year.